Hey guys, this is Sam with Simpler Crypto, and today I'm going to be bringing you a video on the crypto market ecosystem. So what I mean by crypto market ecosystem is how does a crypto market put together? How does it relate to existing markets that you may already understand? And how to make the best of the opportunities that present themselves. So let's start with the first step here. And the first step in this would be most folks are going to start with dollars in their search of getting involved with crypto. So the most popular and secure way to get started would be on Coinbase. Coinbase allows you to deposit USD either from your bank account, your debit account, or some credit cards. And then once you have a USD balance on the site, you can then turn around and buy either Bitcoin, Ethereum, or Litecoin. A key thing with Coinbase is that they have a subsidiary site called GDAX, and I'll show you guys that here. And so this is what the GDAX site looks like. Now, the GDAX site is the same thing as Coinbase. They are the same company. So when you make a Coinbase account, you will by default have a GDAX account. There are a number of advantages, guys, to converting your fiat to crypto via GDAX over Coinbase. So let's run through those very quickly. If you use Coinbase, it is going to be the fastest way that you can get crypto into your wallet, especially if you use either a debit card or a credit card. Those are typically credited to your account instantaneously. If you decide to use a bank transfer, then you can make a purchase and lock in the price of the crypto that you're buying, but you won't have access to move it for about a week. All of these also have fees with them, typically right around 3 to 4% on Coinbase. So if possible, what we recommend is depositing directly into GDAX so that you can have just a USD balance available to you. The benefits of that are, one, that you will get to choose the price that you buy at. So if you see that prices are trending lower, you can wait a little bit and purchase then. If it looks like prices are trending higher, you can wait for a pullback into some support levels and then purchase then. Another big advantage of GDAX is that they will offer you coins at the market price. If you go on Coinbase, you'll notice that one, there is fees, or there are fees, and also there's a slight markup on the coins that you're buying. So just to give you an example, it looks like on GDAX right now, Bitcoin is trading around 7,400. If you were to try to buy that same coin on Coinbase, chances are it would be somewhere around 74.50 or so. So there is not only the transaction fees, but then they also charge a little bit on top of the market price. If you go through GDAX, there are no fees, and you get to purchase at the market price whenever you wish. So plenty of advantages there. So after you have deposited money onto GDAX and you have a USD balance available to you, the next step is deciding what crypto you want to buy. The most common ones that are used as currency within the crypto space are going to be Bitcoin and Ethereum. So I definitely recommend getting started with either one of those two. Once you have converted your fiat into crypto, whether it's Bitcoin or Ethereum, the next step, if you wish to trade that, is to transfer those funds into the Binance account. So the first step would be obviously make a Binance account. It's a very simple process. Once you have a Binance account enabled, then you'll have a number of different wallets with your account, one of which can receive Bitcoin and one of which can receive Ethereum. So you would be able to send from your GDAX account the crypto that you purchase to your Binance account so that then you can use that to purchase something else that is not available on Coinbase or GDAX, which is most cryptos. Most of the cryptos that we trade are only available on Binance or Bittrex, Kraken, sites like that. So that would be the second step, is if you wish to trade any of the altcoins altcoins being anything outside of Bitcoin, and we could even stretch the definition and just say anything outside of Bitcoin and Ethereum, then you would need to transfer into Binance. If your goal is simply to buy and trade Bitcoin and Ethereum, then you can just simply do that on GDAX, no need to transfer. But in the event of a market that's trending higher, the altcoins are going to benefit more than the rest of the coins. So it definitely makes sense to have a Binance account. So that covers the conversion of fiat into crypto and the transfer of crypto from your GDAX account into either Binance, Bitfinex, Kraken, or the exchange of your choice. So let's really get down into what makes this market tick. How does it work? How do all the pieces connect? And how does it relate to a market that you may already understand? So we're currently looking at CoinMarketCap here, and it's definitely a site that I recommend you guys bookmark. It's an extremely helpful snapshot of the daily action in crypto. And what we have noticed is that Bitcoin and Ethereum in this market tend to act very similar to the indices in regular stock markets. So in the same way that you would have the S&P 500, the Dow, and the NASDAQ, and even the Russell for that matter, as indices for stocks, and as the indices go, so do the stocks, Bitcoin and Ethereum tend to work in the same way. So Bitcoin and Ethereum, the direction of those two has a tremendous amount of sway over the altcoins. That's the first thing to always look at is what is the direction of the market by understanding the top two coins here and understanding them as not only their own individual products, but as a way of understanding the entire market as an index. Outside of the top two coins, then we start to get into what we are calling the altcoin majors. So everything outside of Bitcoin and Ethereum are considered altcoins. And anything in the top 15 that is not those two, we are calling altcoin majors. And the way to think of those is think of them like your large cap stocks. So these are going to be your highest market caps, as well as your most established names. Essentially, they work as the blue chips for the space. So we categorize those from about 3, which is currently Ripple, to about 15, which is currently NEM. And those stocks or those symbols will tend to follow the direction of the top two. You'll get more outperformance from your majors than you will by being invested in something like Ethereum. Whereas if you would like to take advantage of a up move in Ethereum, something like EOS, Stellar, IOTA, NEO, etc. would probably be a better way. So those coins we call the altcoin majors. They're in the top 15 and they move in sympathy with the top two. The next tokens that we look at are what we call the altcoin micros. So in the same way that we had the big cap top 15, then we look at also the micros. Now we can go ahead and start here with 16 and kind of go all the way down to about 50 plus, to be quite honest. Pretty much this entire front page is what we would consider the minors or the micros. And the way to think of these is anything outside of your top 15 tends to act like a small cap does in the stock market. So in the same way that if the S&P 500 is up and the NASDAQ is up, that usually implies that the Russell is up. And from a percentage basis, the Russell being the small cap index usually will outperform. That's what we tend to see here as well. So if we see that Bitcoin and Ethereum are up, then we can expect that the altcoin majors will be up as well to a greater degree, percentage-wise. And then if the altcoin majors and the top two are up, then that typically implies that the rest of the micros, everything from 15 to 100 here on this list, will also be up, and typically up more in terms of percent than the rest. So next we have stable coins. Now stable coins There's not very many of them. I'm only going to review two. But the stable coins tend to act as a way of getting flat in crypto. So in the same way that if you were to purchase a stock and it looks like there's some market turbulence ahead and you would like to go into cash as a way of preserving your buying power and keeping things stable. So you sell the stock and you collect cash and you just sit on the cash on the sidelines. Well, the way to do that in crypto is to go into something like Tether. So typically using Bitcoin as your funding currency, when you sell and you make a profit on something, the profits will be denominated in Bitcoin. However, the issue is if we expect any type of market volatility to the downside, that can affect the value of Bitcoin. So it's possible that you can make more Bitcoin and then the value of Bitcoin actually drops. So the way to protect yourself against that is if you make a profit, and if you take profits in Bitcoin, and you see a bit of market turbulence ahead, you can actually roll that Bitcoin into Tether. And Tether tends to work like the US dollar does in crypto. So the point of Tether is that it stays stable relative to $1. And if the crypto market goes way up or the crypto market goes way down, the Tether should stay pegged to $1. And that's the easiest way of getting flat in crypto. So if you want to reduce your risk to zero, essentially, then Tether would be the way to do that. Another way that you can do that is if you expect just a bit of market turbulence, so you don't think that the markets are going to drop more than 1% or 2%, but you want to be in something safe, but still that participates in the move, then we can go into something like Binance Coin. Now, Binance Coin tends to act as somewhat like the utility space. It tends to be a measure of safety when folks are scared, but it's not going to move too much up or down. The difference between Binance Coin and Tether in terms of stability coins or stable coins is that Tether will not move up or down regardless of the market conditions. Once you've gone into Tether, your balance is essentially in USDT, and if you would like to go back into crypto, you would then have to use that Tether to buy back in. With Binance Coin, it still remains part of the market. So if the market goes way down, then Binance Coin will also drop. If the market goes way up, Binance Coin will go up as well. And if it just dips slightly, it will be one of the more stable ones to be in. It's not going to be 100% locked into the dollar like Tether, but it allows you to reduce your risk without getting completely on the sidelines. So the two stability coins here, or two stable coins, are going to be Tether and Binance Coin. And so let's just review everything that we've discussed. So the first step, guys, in getting started with crypto, like with most folks, you probably would have a USD or fiat to get started. So you would need to go through a fiat gateway or a fiat exchange to exchange your dollars into either Bitcoin or Ethereum. We recommend getting started with Coinbase and then GDAX as your point of purchase. After you have either Bitcoin or Ethereum in your GDAX wallet, you can either let it stay there and you can stay invested in Bitcoin or Ethereum and trade in and out of that wallet. Or if you would like to trade the altcoins, then you would have to exchange or transfer those funds into a Binance account or Bitfinex or Kraken. There are a number of different options. We use Binance. And the wallet transfers are pretty straightforward. So transferring from GDAX to something like Binance would populate your Binance account, and then you can use those funds to purchase an altcoin, something like Neo, Dash, IOTA. Anything on this list is going to be found on Binance. The way it all connects together, guys, is that the two top coins, Bitcoin and Ethereum, are going to work as your indices. So Bitcoin acts as the S&P 500, and Ethereum tends to act more as the NASDAQ. So you'll get more bang for your buck with Ethereum, but you also have more risk. The altcoin majors tend to act as stocks or big cap stocks within these indices. So everything in the top 15, think of it like a technology stock. a high cap or a large cap market technology stock. Now these will typically move more than the index, so better value upside, but also higher risk reward would be the better way to say it. So the large caps, higher risk reward than the indices. However, we always want to know what the indices are doing before we buy anything. After that, we had the micros, and then we're counting the micros from about 16 on this list to about 100. And those tend to act as your small cap companies. If all of the above are moving in the right direction, then the micros will tend to have an outsized move in terms of percentages in going up or down. And then lastly, if you would like to get on the sidelines and be flat as possible in the crypto space and protect your buying power in the event of a downturn, then you can go into Tether. And Tether allows you to stay 1-to-1 to the US dollar, and the value, your purchasing power is not changed with fluctuations in the market. Okay, hope that was helpful, guys. And I hope that you have a chance to check out simplertrading.com/crypto. We're currently offering a $7 trial for silver members for 2 weeks. And we will have a Q&A this Tuesday that's available to all silver members. So if you would like to check out the Q&A and check out some of the content that we have on the site, or just simply get started with trading crypto and you just don't know where to start, check out simplertrading.com/crypto. And we have a $7 trial that goes for 2 weeks. Hope to see you guys in the room, and have a great day. Cheers.